एक मिनट रुक जाओ, रेडी होने दो. चलो ये कर लेते हैं. दिस कुड बी अ ग्रेट इंट्रो.
Hi, I'm Akshay.
Hi, this is Saurabh, and you are listening to the Founder Thesis podcast. We meet some of the most celebrated startup founders in the country.
And we want to learn how to build a unicorn.
Anshoo Sharma is living the dream. He was working at one of the most prestigious VCs of the country, where he backed investments in startups like Fresh Menu, LimeRoad, Craftsvilla, among others. But he had a thesis on the untapped potential of the offline retail space and was looking for a strong startup to back in this space. When he could not find a good enough venture to back, he decided to start Magicpin with the aim of building a data-driven performance marketing engine for the offline retail world, and today Magicpin serves millions of retailers with a whole host of innovative products. Here's Anshoo talking about his journey from being a techie working on deep tech products to creating innovative products that empower mom-and-pop retailers.
I joined Hughes, in fact, in late 2000 itself. I think Jan 2001, I had joined them. So this is pre-past. So I joined them then because they had this program to say you can do your last semester with us. In fact, I remember the project that I was a part of. It was the product team within Hughes. So there was a bunch of things. There's a lot of services business that they do, but they had one team which was building their own proprietary products that would be selling. And they were building protocol stacks in the voice over IP area. And that again was a very good experience because the moment you get in, there was a lot of work. So they would throw you at the deep end. I did a bunch of things that were in sandbox, but soon enough they needed people and they could see that, okay, it seems like he's getting hang of it. So they started to give more. I was used for around 2.5 years that I was there. And I enjoyed that a lot, right? This satisfaction of building and seeing how to build at commercial grade, because those stacks that you're building, those were getting deployed. I filed my first patent there.
Oh, wow.
And that was also very early. They usually you'd not get an option to file a patent. I was at the right place at the right time. There were a number of what was defined as the Internet Engineering Task Force (IETF). We could submit drafts on that. So I think within that context, I had a great run. What I realized that I felt though saturated because 2 years out of college, I had seen that I'd built that product. And at some point owning some of those completely end to end by myself. But I felt that there is a lot more that I haven't seen that I want to go out and. And there was no other reason because other than that, the run at Hughes was great. But I chose to try something different, and I found a job at Motorola in Bangalore, and I took that. I remember the director at Hughes saying that, I don't understand. Your family is here, your life is here. What don't you like about it for you to go and put yourself into a different city altogether? And I didn't have a very good answer other than that I don't know what I've not seen. I want to go out and see more things. And then I joined Motorola in Bangalore. And the first thing I realized when I got to Bangalore, and this is the first time I was living out of my home, right? That you need to solve for food 3 times in a day. I'd never thought of it in that way, but now I had to. The other thing which happened while I was at Bangalore was that I somehow realized that technology is a great place to be. But if this continued quest for needing to break out, I just felt that to an extent is still constrained. And this is 2003, 2004. So you either go out, and Motorola had a bunch of those opportunities. Motorola had Schaumburg office in Chicago where they were doing a lot of work, and a lot of work in India used to happen in collaboration. In fact, even while at Hughes, right, there were enough opportunities. We were representing Hughes at a bunch of international forums. Actually, I got to do my first international flight. I did my first flight to Paris. That was something which was very interesting. And, all of this was a result of working on something which has global demand. So to that extent, it was very satisfying, and that continued to be true at Motorola as well. but I just felt I'm missing something which would let me break out, and that is the context in which I wrote Cat in 2003, and I got through almost to, I think, to all of the IIMs, and that seemed to me like a good thing to go out and do next. That's how I got into Ahmedabad, and that was after 3 years of work experience. So it was not as if I'm going in blind, but I was going in blind to the extent I didn't have any understanding or context of what businesses are. Literally, I would see Economic Times and I would see crores, and I would not understand what a crore means. Then I think the time at Ahmedabad was amazing to the extent that somehow suddenly, like in Matrix, Neo would start to see the code everywhere, right? I could start to see P&Ls everywhere. I could see one with the Kala would have a P&L. I can see his cost. I can see his revenue. I can see his marketing, right? And so just like I think when I started to study computer science way back in college, I had a similar kind of awakening studying business. Yeah. And this time around, other than of course academics, right? We could get together a few like-minded people, 4 or 5 of us, and we practically made it our business to win almost any event that was happening in any competitive circle. And we won a bunch of things through the course of those 2 years in India, in Singapore, and even in my first year when usually people are just focusing internally on acads, we were the first team among the second year students who could win Tata Business Leadership Award. At that point in time, I was very much conscious about what I want to get out of Ahmedabad, and we could find a bunch of like-minded people who could together work towards that. And the 2 years was quite satisfying. At the end of that 2 years, I was fortunate to get an offer from Bain and Company. Bain was setting up its shop in India, and they want to help build the India office, even though they didn't have an office in India back then. So I joined Bain in Boston. This was in 2006. Also, at the same time, I had also got married because I had known my wife Anjali at that point for 5 years or so. So she and I had joined Hughes together, and I had been in touch with her through different places, right? Through Motorola when I was in Bangalore, then when I was at Ahmedabad, and she'd been also in different parts of the world as a software engineer and then in telecom. And then we also got married, and then we spent the next 1 year in Boston, a little over a year in Boston. At the end of that 1 year, Bain was in a prominent position in India, and there was an opportunity then.
What were you doing at Bain in that 1 year in Boston?
A bunch of interesting things, but I would say my time was kind of half and half divided into one part was pretty ring fence. So Bain has this advisory team which gives commercial advice or does commercial diligence. If a private equity investor is investing in a company, they would ask Bain to come and give their point of view. So I was part of that team that would give this point of view. So I think I spent around 6-8 months in that group, and every we would see a different company. So like company after company, I remember in my time at Bain, I'd done some 22 diligences. So I'd looked at so many spaces, sectors. So you kind of get a knack of very quickly to get to, here is this company in this market. What are the three things that really matter that let you understand whether it's a good investment or not, or what do you need to believe in to do this investment? So that framework I started to build while I was in Boston, and then I did the first 6 months. In fact, that I was there, I was working for a pharmaceutical giant. I did that, and in fact, I continued to do private once I was back in India also for Bain.
What were some of the industries that you looked at in India?
From technology, consumer, retail, industrials.
So you would figure out what is a good valuation for this company and give that as advice to your client that A, invest or not, and B, invest at what price.
The second part we would shy away from doing. We would kind of like rephrase that to say, if you were to invest at price and expect so much return, you need to believe that these three things need to happen. But you stay on commercials or on the business aspects, which you probably have a better handle. And then I also worked with just once the investment side of the market crashed, I did a fair bit of work in the consumer, telecom, retail space also, which were traditional clients, large companies, public and private, who are building businesses and are looking for advice around the specific area that.
Like what kind of, like reorganization or optimization, that kind of work?
Those kind of things. Also, I remember there was one telecom giant which was bidding for 4G pricing. So we set up this massive model and then understanding of how to bid, what do you expect as revenues, how much should you bid. I think all of those kind of things. I remember there was a toy company which was a company that was a very strong brand, but their penetration in terms of revenue was not as much. What do they need to do to get to capture the kind of demand they intrinsically. So I think those were the kind of problems that we would work with these companies, and it would be fairly deep operational kind of work, but also at the same time being specific about it to say these are the items that we should prioritize over the next 3 to 6 months to start to see the results.
Okay. So, some of the other founders that I've spoken to who also have a consulting background typically end up feeling frustrated in a consulting role because they don't own the outcome. Did you also feel that way?
I would say frustrated would be a strong word, but yeah, I did what I spoke of right up front, right? Thing about building is what I was missing. And people is great at a place like that, especially Bain. Super sharp about how to make the people. And in fact, that was the reason it took a long time for me to also get to this answer that I would explore something. So I would maybe hesitate from saying frustrated, but maybe more this thing around that, is this what I want to do 10 years out, 20 years out? And that answer was not that, no, this is it, right? I kind of long to be able to come closer to ground and build things. Unfortunately, that opportunity you don't get as much of. Especially, I think that's an opportunity you can pursue once you are maybe a senior partner where you're building a practice, right? You That building is of a different kind. It's not building a product. And I think in somewhere around that course, right, I met Bejul, who runs the Lightspeed. He had taken over the office, and he was looking for like-minded individuals to come and join him. Interestingly, he had worked at Bain really long back, and I think he had some affinity to meet people. So I met him, and that process took some 7 months. I was, venture as an asset class was really nascent. This is 2009 that we had.
So, I have a few questions here. Um, in your LinkedIn, it says you're a venture partner at Lightspeed. Uh, so, does one need to put in one's own capital to become a venture partner in a VC firm, or I mean, how does it operate? Or are you getting a fixed salary and a percentage of whatever exit gets generated? And tell me about Lightspeed also.
Yeah, so I can talk about the venture model in general. So the venture model is basically based on what is referred to as that you get 2% of management fee. So if you deploy $100 million as a platform, you have $2 million to cover the expenses for the assets you've deployed. Plus, you get 20% of the upside you generated. So if you converted that 100 million into 500 million, the 400 million of upside that got generated, you get to keep 20% of that. So that's 80 million.
And this 100 million is raised from HNIs and
HNIs, but also institutional funds, right? There would be, let's say, pension funds in US and Europe would be keen to get exposure for some of their capital to venture risk or emerging market risk, and thus they would want you to invest that money on their behalf. So those are referred to as limited partners in the industry, and the people who are making the investment, they are referred to as general partners.
this is like a US based entity, or like what's the history of Lightspeed from that?
Lightspeed is I would say, a much older setup. This was their eighth fund. So every fund you can imagine has, let's say, a life cycle of 3 years. So this was 24 years that the senior partners or the founders had been investing in the space. They had Lightspeed had originally started from US, and then they set up in Israel, China, and India was the newest market that they were.
Got it. Okay. So tell me about the Lightspeed experience. What were you doing there? What kind of thesis did you form? What kind of investments did you participate in? What were the hits and the misses?
So I was there for close to 6 years. So a full cycle. What we did in that 6 years is around 10 investments that I was a part of. And the first investment I remember was a company called Indian Energy Exchange, which we started to do the work in 2010 is when the investment actually happened. An example of the kind of investments Lightspeed was to do. Power is a very asset intensive sector. Investments that were happening in power at that point in time, privatization of power that was happening, right, over the last 5, 6 years or 10 years. And the investments were largely around creating power assets, investing in power gen. But at Lightspeed, we went on to find a company which is an exchange for power. It's an exchange that trades spot power. So someone sitting in Chhattisgarh can, for someone sitting in, let's say, Gurgaon, they can discover the national grid kind of clears that full business because close to the crow of a country needing more and more power and needing the right kind of recovery of that power. You're not having to get your capital stuck in those fixed assets, but you're in a very asset-light way of getting exposure to that same growing market. And financial services, like our thesis is that we are working on the day ahead market. Then we'll work on like the futures, the forwards, the derivatives, right? The entire stack of what would exist for this commodity. That ability to somehow find a solution in all of these different. And some part of that is, also to do with just being focused on the outcome and doing whatever. Resourcefulness is just one part which makes them able to get to the outcome, but not relenting. Right? There are a bunch of really high quality people around us in the Indian, I would say, tech ecosystem now, and all of them just show the same traits, right? That they've seen the opportunity, they've gone aggressively after it, and they're just unrelenting. They would not give up. They'll attract more resources towards them.
Hmm, hmm, hmm. Okay. So, there's this concept. I don't know if you read this book called Loon Shots, which talks of a P type and an S type innovation. P type being a product innovation through technology, S type being a innovation in the process or the system, deriving more efficiencies. So, which of your investments were backing S type innovation and which of them were backing the P type innovation?
Yeah, I'm not aware of that framework, but I think whatever we were doing was more product, and in the short term, operations or structure could help it. But fundamentally, we were believing that at at a scale which is much bigger than this product will just create such a deep moat that others would find it right. For example, if you think of Indian Energy Exchange, it's not that power trading was not, but when you come to this model and you kickstart the engine somehow and gets to a certain scale. From that point onward, it's on its own turn. And in fact, really high quality companies in India, where we could not find that you call it a network effect or that P effect, right, kick in, we did not make those investments. Largely because, like as venture investors, our focus was more to find where do you find that upside, right? Versus saying that this is a really strong execution, but that becomes a lot more like a private than a venture like opportunity.
Okay. And typically, what was the kind of investment that you did? Like, at what stage was it? Like seed, Series A, and like where did Lightspeed come in?
Seed A and B, I would say. But we realize that anytime you go towards B, it is really hard to get the price right. We intentionally created this mix of coming in really early, Seed and A, like Limeroad that I mentioned to you, one says Craftful, like all of these companies, right? We were coming in really early, and we could come in because we believed in the space and knew the entrepreneur, right? And over a period, once you have seen enough of that pattern, once you formed your thesis, it becomes possible to take that leap of faith, and that's when you kind of get paid in terms of the returns that accumulate subsequently.
And did all the investments live up to their potential? Like, what were some of the misses?
Yeah, I think misses were on both sides, huh? Things that we did and they didn't result in what we thought they could, and things that we did not do, and they went on to become pretty big opportunities across the board, right? I would first talk about the latter that we had, like I think we looked at all the big names that you see around you, right? I remember, like, especially to call out, Ola was one company that we looked at very closely at different points in time. Zomato, we had an opportunity to invest at one point in time. And one thing which we didn't factor as well in is that there is this demand and supply equation. where if you get the number of really high quality companies in the country is so low that if you are part of building one, the 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 return on that kind of gets taken care of because there's more capital that wants to come in. The same thing that we were seeing, that we were getting priced out on companies that were further along. I think there was an opportunity to see that, right? If you, for example, look at Flipkart, like the economics were not working out for a very long time. The concept of e-commerce in India and being the leader in that is valuable by itself, regardless of the cash flows it is generating in the short term. The strategic value is meaningful. Just clarity on that piece and confidence in making such investments, which will be backloaded in their returns, and the returns would be based off the strategic value that's getting created and at scale. I'm not talking about an acquisition getting done, but that realization to an extent dawned later on after having seen some of that story get played out. And that's more of a, like, I think from my perspective, one thing.
Hmm. Okay. Why did you say no to Zomato? Like, what was the thesis behind that?
In most of these cases, the risk reward, right? The price that we were seeing to the current numbers that were available, it required us to believe that there is a leap that can be taken. At that point in time, I remember the leap was that it would be successful in many international markets to put together, and they did a pretty good job at it, right? And they've gone on to build so many things that couldn't have been conceptualized then. We couldn't get to that same conviction and answer, but it seems right that there are many more things at play, and with disproportionate amount of capital which sometimes becomes available as a result of scarcity of high quality assets, right? You can build things that were not part of the original vision that you had for the company. And I think that's where value sits, right? And that's where, as investors, once you're inside the company, there is so much more that can be done if you've got the right team and the right market. The degrees that you can maneuver, right, they just expand meaningfully.
And what are some of the investments which are yet to live up to their potential, like which are still on the way, where as compared to what you might have projected?
Yeah, no, see, we didn't have all successes. We had invested in another fashion commerce company called Fashionara alongside Helion. And Arun, really accomplished, high quality entrepreneur who built Reliance Trends before this and was at Madura, if I remember correctly, even prior to that. So really high quality person who'd seen how to build a business in this area. I think when the markets become tough, right? It's just hard, and the onslaught continues from a Mintra and a, I think, Jabong. There's so many people who came in that even if you've got something really high quality, like they will just drown you with the amount of money that can be thrown into the market. So unfortunately, we ran out of money.
Okay. So typically, these investments that you did, were they inbound inquiries or outbound? Like, did you form a thesis and then go out and find companies, or were these people who were like writing into you?
It's always a mix. I think the inbound, the quality on inbound, usually as invest, everyone would reach out to. The separating the noise from the signal is a hard thing. So a lot of investments that you end up doing are really long-term relationships that you've nurtured that result in an investment subsequent. And that was true with all of these. Right? I spoke to you about Suchi also, right? That was an introduction which was made. And I think, having said that, if I think about a referral from a peer who's investing, and or someone in the industry who says there's this really high quality person who's building this, I think that kind of inbound is high in quality and really high likely to succeed. But to get that inbound, you need to do a lot of outbound, right? You should have gone and built that network. And it's because you've built that network, you have those conversations going, is that when that person gets to know something in their space which is of relevance to you, they would kind of reach out to you. Sometimes it's just a question, it's your opinion that they are looking for. That's just basically keeping the network alive by genuinely trying to be of help to people who you connect with, and some of those things will lead to an investment which is inbound. At the same time, the more popular assets in the market, those would be to an extent shopped around, or you might need to be ahead, or somehow get to have your leg in before someone else does. And that's equally important as an investor. You can't like the investor role is an interesting role. While it seems like you're kind of looking at stuff that's coming to you, actually the amount of work that it takes to build that network and the hustle with which you need to continue to invest that time in the hope that something will come out of it on the other side, right? That's just a very very different part, like a sales job. Even though you're giving money, it is part like a sales job where you're continuously building that network, right? Building those rails through which you will get those opportunities, from technology, consumer, retail, industrials.
So you would figure out what is a good valuation for this company and give that as advice to your client that A, invest or not, and B, invest at what price.
The second part we would shy away from doing. Then we would kind of like rephrase that to say, if you were to invest at price and expect so much return, you need to believe that these three things need to happen. But you stay on commercials, or on the business aspects, which you probably have a better handle on. And then I also worked with just once the investment side of the market crashed, I did a fair bit of work in the consumer telecom retail space also, which were traditional clients, large companies, public and private, who are building businesses and are looking for advice around the specific area that.
Like what kind of, like reorganization or optimization, that kind of work?
Those kind of things. Also, I remember there was one telecom giant which was bidding for 4G pricing. So we set up this massive model and then understanding of how to bid, what do you expect as revenues, how much should you bid. I think all of those kind of things. I remember there was a toy company which was a company that was a very strong brand, but their penetration in terms of revenue was not as much. What do they need to do to capture the kind of demand they intrinsically? So I think those were the kind of problems that we would work with these companies, and it would be fairly deep operational kind of work, but also at the same time being specific about it to say these are the items that we should prioritize over the next 3 to 6 months to start to see the results.
Okay. So, some of the other founders that I've spoken to who also have a consulting background typically end up feeling frustrated in a consulting role because they don't own the outcome. Did you also feel that way?
I would say frustrated would be a strong word, but yeah, I did what I spoke of right up front, right? Thing about building is what I was missing. And people is great at a place like that, especially Bain. Super sharp about how to make the people. And in fact, that was the reason it took a long time for me to also get to this answer that I would explore something. So I would maybe hesitate from saying frustrated, but maybe more this thing around that, is this what I want to do 10 years out, 20 years out? And that answer was not that, no, this is it, right? I kind of long to be able to come closer to ground and build things. Unfortunately, that opportunity you don't get as much of. Especially, I think that's an opportunity you can pursue once you are maybe a senior partner where you're building a practice, right? You That building is of a different kind. It's not building a product. And I think in somewhere around that course, right, I met Dejul, who runs the Lightspeed. He had taken over the office, and he was looking for like-minded individuals to come and join him. Interestingly, he had worked at Bain really long back, and I think he had some affinity to meet people. So I met him, and that process took some 7 months. I was, venture as an asset class was really nascent. This is 2009 that we are.
So, I have a few questions here. Um, in your LinkedIn, it says you're a venture partner at Lightspeed. Uh, so, does one need to put in one's own capital to become a venture partner in a VC firm, or I mean, how does it operate? Or are you getting a fixed salary and a percentage of whatever exit gets generated? And tell me about Lightspeed also.
Yeah, so I can talk about the venture model in general. So the venture model is basically based on what is referred to as that you get 2% of management fee. So if you deploy $100 million as a platform, you have $2 million to cover the expenses for the assets you've deployed. Plus, you get 20% of the upside you generated. So if you converted that 100 million into 500 million, the 400 million of upside that got generated, you get to keep 20% of that. So that's $80 million.
And this 100 million is raised from HNIs and
Edge nice, but also institutional funds, right? There would be, let's say, pension funds in US and Europe would be keen to get exposure for some of their capital to venture risk or emerging market risk, and thus they would want you to invest that money on their behalf. So those are referred to as limited partners in the industry, and the people who are making the investment, they are referred to as general partners.
This is like a US based entity, or like what's the history of Lightspeed from that?
Lightspeed is I would say, a much older setup. This was their eighth fund. So every fund you can imagine has, let's say, a life cycle of 3 years. So this was 24 years that the senior partners or the founders had been investing in the space. They had Lightspeed had originally started from US, and then they set up in Israel, China, and India was the newest market that they were.
Got it. Okay. So tell me about the Lightspeed experience. What were you doing there? What kind of thesis did you form? What kind of investments did you participate in? What were the hits and the misses?
So I was there for close to 6 years, so a full cycle. What we did in that 6 years is around 10 investments that I was a part of. And the first investment I remember was a company called Indian Energy Exchange, which we started to do the work in 2010 is when the investment actually happened. An example of the kind of investments Lightspeed was to do. Power is a very asset intensive sector. Investments that were happening in power at that point in time, privatization of power that was happening, right, over the last 5, 6 years or 10 years. And the investments were largely around creating power assets, investing in power gen. But at Lightfeed, we went on to find a company which is an exchange for power. It's an exchange that trades spot power. So someone sitting in Chhattisgarh can, for someone sitting in, let's say, Gurgaon, they can discover the national grid kind of clears that full business, because close to the crow of a country needing more and more power and needing the right kind of recovery of that power, you're not having to get your capital stuck in those fixed assets, but you're in a very asset-light way of getting exposure to that same growing market. And financial services, like our thesis is that we are working on the day ahead market, then we'll work on like the futures, the forwards, the derivatives, right? The entire stack of what would exist for this commodity. That ability to somehow find a solution in all of these different, and some part of that is also to do with just being focused on the outcome and doing whatever. Resourcefulness is just one part which makes them able to get to the outcome, but not relenting, right? There are a bunch of really high quality people around us in the Indian, I would say, tech ecosystem now, and all of them just show the same traits, right? That they've seen the opportunity, they've gone aggressively after it, and they're just unrelenting. They would not give up. They'll attract more resources towards them.
Hmm, 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 hmm. Okay. Okay. So, you said that in inbound there is a signal to noise issue and there's a lot of noise there. How does a startup looking to attract funding overcome this? Is there a specific instance you recall of someone who overcame that, which was just like an inbound, maybe a cold email or something, or is it generally that it's best to find someone who can introduce you?
I think it's best to find someone who can introduce you, and it's not hard now, given know some the word goes from them. Cold email. Having said that, like if you're losing time, then a cold email. I know out of cold inbound, and the like, everything is looked at. Nothing is not. So if I think, and the likelihood of success, if that investor is actually working in that space. So if someone's invested in that space, they would likely want to know about anything else that is happening. If they have a point of view, someone's looking at, for example, let's say online music streaming, some point in time involved, they would like to know anything that is moving in that. And if you find the right, if you're reaching out cold to them right now, if someone is investing in, let's say, microfinance companies and reaching out to them cold with, let's say, the online streaming music, that will not yield. Doing homework, whether it is around building a network through which someone would put in a good word, or it is to do the research on the person who would be relevant.
Hmm. Hmm, hmm, hmm. Okay, got it. Very useful advice. Okay. So then tell me about how Magicpin came about. Like I'm sure you were enjoying your time at Lightspeed. What made you want to uh, do something of your own?
Yeah. I think that largely came from it was, as I said, right. Even before joining Lightspeed, I told you, right, that it had been kind of nurturing these aspirations. It's just that at Lightspeed became that. It's just that I spent some time in China. That was actually a trigger point for me. I remember Rajan Anandan from IIM-A. At that point, he took a delegation from India. Everyone. This was 2014, late 2014. It was amazing. It was almost mind blowing, the way in which people were thinking, and whatever you can think, you can build, and right, all of these things that you would imagine, you're actually building. And looking at that, I realized that India is really in its infancy. Even it's true even, but if I were to thus go on to invest, it's a great way to see what can happen, right, and to play this so nascent, right. But the other way would be to go on to build, if that's what I would enjoy. And it was a very interesting window in time, right, where I had seen and experienced that. And investing is a great place to be. High quality, risk adjusted, it pays pretty well. But I just felt that if I don't go out to build, then I will kind of regret that for the next as many years that I don't. And at some point, you can't do that. I felt this is the last opportunity if I were to get any. And if there was one thing I could do, what would that be? Um, and that's how having been at Lightspeed for 6 years, I'd seen this recipe, right, of people, markets, and capital kind of play out over and over again. So I was quite like I was this time around. It was not that I did not know what had to be done. I'd been prospecting this space at Lightspeed for a while, which was offline retail. That there's an opportunity where we would have backed a team if we would have found the right team. I got convinced that I should go out to build, and this was the idea that was the top. And we had seen this for a very long time. I knew what we and I could get the right team, initial team together. Fortunately, which basically meant that my ex-colleague at Bain Co. Bridge was subsequently at a startup. At that point, Nexus was looking to step out and build something. He'd been there before I was there, and he would ask me, investing is slow. Why do you do that? Why don't you why don't you do it? But fortunately, at that point in time, I got to that answer, and he was also on the same answer. So we could converge, and we could say, yeah, this is the right space.
So, what was the thesis in 2015 when you started it out? What did you want to build?
Retail, right? Discovery for offline retail. Like, let me tell you about Mag now. This is the problem statement, that offline is 95% of the retail market, right? Most of retail gets consumed in the offline. Leave the last, but e-commerce is 5% of retail, and that has seen so much investments. You technology, everything is tight. You visit an Amazon product, the ad for that page can follow you wherever. They've really nailed it down to who should be marketed what. But if you think of offline, it's still kind of largely driven by very broad tools like above the line marketing. What happens? Is that going in the right place or not? And that's because there's no data on offline retail. So offline retail, in spite of being 95% of retail, is dark in terms. And if that data was made available, then this market could be transformed. If you could understand who's spending how much, where, etc., right? There's so much more that. So that was the abstract of it. That we would build a platform that is users, retailers, and manufacturers, and we would create propositions that are win-win for all. Which is, the retailer is happy to spend because he's getting. The manufacturer is happy to spend because he's able to reach the right customers, say the message to them that, and the users are happy because not only are they discovering all of these interesting things, but they are getting rewarded for it. So the way we built the platform, we built a rewards program which is powered by our app, where for sending their shopping receipt, our users will earn Magicpin points. And these points can be then used back at our partner network. The interesting thing about the model is that as we keep aggregating users' purchase habit, we are able to form this graph on who's spending how much, where, frequency, category, specific SKUs, and then we can take back and match these preferences with our partners and allow redemption of the points that we had given to our users for sending us those receipts to be burned at those. It's like a two-way match between retailer and user, and kind of tries to match both of them to the right one. And to a retailer, it becomes really beautiful because in the past, if the retailer was to spend on Google, Facebook, right? Like in most cases, they would not have a way to spend a small. But even if they would, right, they would not know where that money went. You spend 10,000, Google will just eat it and no one would. But with Magicpin, if they spend that 10, they get to see the return of that 10. And if we are delivering a 4x return on that 10,000 rupees, they will see the 40,000 rupees worth of business. And they can track it through the receipts you would have shared or to the points that our users would come and use at that. So this performance marketing for offline, right? Or you think of it as Google AdWords, that is the heart of what matters. And that was a newer entrant, started with retailers. Then we realized that there is one more entity that's playing a very interesting. And now we are working with the ITC or a PNG, and because they are also in that same ecosystem, and they are also spending in a way that they don't get to. So you get points for going to that store, but you earn more points if you find this SKU in your basket. And we are reading the receipts, right? So we're able to understand that.
Hmm. Hmm. And users could submit any bill or bill of partners.
Like the kickstart of any that we do is that users can submit any bill wherever they are going, whatever they're spending. And our way of acquiring supply is on the other side, to go and say that to retailers. And we don't even go and say, we WhatsApp them, and we would send that link over WhatsApp, which would show pictures of their customers, the spends that those customers are doing at the retailer store, how his average order value differentiates versus other competition in that neighborhood, his repeat rate versus competition. He's never seen his business, and he doesn't even know us, but we immediately build credibility on the back of data that we have. And then our pitch to him is fairly straightforward. We are not even asking for upfront money. We say that sign up with us, and then any business that we drive to you, you can pay us a percentage of. And because of the fact that the moment a partner signs up, he would now be accepting Magicpin points, we are able to immediately drive demand to that partner.
Okay. So, where did you pilot this and how did the pilot go?
I remember the initial campaigns we did were out of sitting in the Lightspeed office, right? That we were just trying out if I run a Facebook campaign to say, send me your read from a cafe coffee day, and I'll recharge your phone. I just wanted to see if people are going to do that or not. And not read actually. At that point we were testing selfies. Are people going to send selfies? Because we wanted to build. And we got a massive number. We did that for Pizza Hut. We did that for KFC. All the models. So this question that will people hesitate to send their pictures to get reward points, right? That seemed like a no-brainer. And our model throughout the journey of building a company has been to say, what are the key risks? Let's identify the key risks, and then let's solve for each of those, right? Let's kind of keep going after them one by one, such that we. In fact, the first version of the application we had, this was largely on Facebook. Huh? We didn't even have anything. The second version was also we didn't have anything. We took a number on WhatsApp and hacked that on the back end with Freshdesk, and said people that if you WhatsApp your picture, phone number, and we were doing this in Delhi, summers, so it was hot, and we people walking on the street, we said that if you were to WhatsApp your picture and bill today to this number, we will recharge your phone. Right? Again, we saw in the first day some 100 transactions came in. Like our this hacked together backend that broke because we couldn't approve that many. Right? Then the next version we had was we kind of took an open source chat application, and to people who were coming on WhatsApp, we said that on your repeat transaction, you please go to this. Like acquisition was still happening on WhatsApp, but we said your next transaction, please do it on this app. It's still chat, but at least it's now our chat because WhatsApp will keep blocking us, right? They will realize that these guys are doing something funny here. They'll block us. And we kept coming up with ways to not getting unblocked, but everything will have its life, right? And it was too much. So we said, let's take our repeat users out of it. Let's keep using it as an app. And that worked well. It was just now our chat, so we didn't have any issues, but our backend remained. Then we did one, and this was all happening in the first 2 3. We kept iterating. Actually, the first app came after the first 3 months, and the first app, which is similar to what we have right now, that came after. But we had learned so much in that period. I remember the next thing that we launched is in our chat app, we kind of created a magic wand. And when you press the magic wand, you would get pictures of people from around you back. So not just giving pictures to earn points, but now you could get pictures back. And we saw a lot of people were clicking those, like pressing that wand button again. And we saw people who were pressing the wand button, they will stay with the platform. They're getting more joy and fun out of it. So in fact, our first version of the app ended up happening the feed, which was this interesting pictures from around you, as the homepage. Because we found that the engagement was as big a lever. I can transact only so many times in a day, but I can open the app to see what's going on, who's doing what, many more times. So I think I think that was the philosophy how we kept kind of building layers and layers. At this point, at the back end, that Freshdesk, it's fully automated, machine learned, and wherever we need decision manual intervention, we have like our own implementation or having someone approve those transactions, that piece still has, I would say, legacy from 5-year-old OP used kind of customer what we are doing, and then kind of kept building on it. Yeah, that's a story of how we started, and most people who are around in the company still, right, from those times would remember that fondly. I think the things that all of them had to do to get the flywheel spinning, but that taught us a lot. It taught us about how to improvise the initial product, how to get any market start. In fact, we never marketed on Facebook because our primary marketing method was on which we kind of finished in our initial. And once a market would have the first initial 100 200 people, I mean a locality, right? When I say a market, it's really a small people would refer their friends in because it's an interesting proposition. If you and bill and you get points for it, yeah, why not? So that's how most of the growth happened. 90% of our acquisitions were happening with that, and that continued to be a lot of those learnings, right? Just whatever was working, we just imbibed that. There were a bunch of things that didn't work, but whatever was working, we kind of added that to our toolkit. And
So, how much have you raised so far, like in terms of funds?
we've raised, put together $37 million so far.
And what was this? How much of this was used to fund the points that customers would earn? How much was used for other stuff? Like, how did you use these funds?
Interestingly, we've never been very far away on our economics, right? We've always been pretty close to making the economics work, and that discipline was a result of just like both Bridge and my backgrounds, right? Like, let's build a business that will stand on its own feet. And so, to that extent, most of the investment and a lot of that money is not a lot, but the last round that we raised 7 million, that but a lot of the investment went into building the product, building the markets that were important, and less into the, let's say, just the burn. The investment, in fact, I would say, has gone into building the system, which is now scaling.
And how many people use, like, are you at liberty to tell us stuff like that?
Yeah, we around 5 million on the platform, and I would say that the rate of growth I spoke to you, people finding the more demand gets more supply gets even more demand, right? So it's just once you've gotten it, yeah, and there's a lot more because our core TG is this 18, maybe 28, 30 kind of age group, which is looking to experience life, is value conscious, which time is to an extent being quoted by most brands want to speak to, and that segment to an extent like tech savvy and a bunch of other things. But if you think of the concept we have, which is that of savings, it's an even more universal concept, like housewives for instance, even people beyond that 18 to 30, right? It's very relevant but our mode of engagement on the app was designed for this segment. Our opportunities are actually a lot more around, okay, how do we lower the bar in terms of the usage of the app for an even larger segment, such that like the proposition of savings, let everyone use. That's one vector of growth. Other, there are vectors of growth around more cities. We are still focused mostly on the metros, even though we are, but there are many more cities that are available. There are many more categories that are available. For example, food and fashion was a very big part of our monetization, even though we are seeing transactions, but a big part of our monetization. And because that was working so well, we didn't build monetization in other categories. But over the last 3 months, we've actually managed to build monetization on those other categories. We are now providing them with online delivery capability to accept an order, but also marketing for that capability. It's not sufficient in this environment to just send them footfall because the macro is, it's important to enable them to see where the world is, make them capable of accepting online orders, and then kind of sending demand to them on the online order side. Let me just build one more piece on that. That we realized that like we were sending orders to them and then gave them the full stack from payments to order management to a third party integration. Say we will generate the order, you will see it, you pack it and keep it ready. We'll collect the payment for you, and then we'll get someone to pick it up from your store and deliver it to you. You do this part out. But then we realized that in doing that, we are bundling our marketing with the rest of this. So we've now separated that rest of the SaaS stack out and kind of given it to retailers at zero marketing. We've had like in a way of Shopify for retailers, right? Go store.orderhere.io. We've created those kind of white label links. And any business that comes to the store on that URL, we don't charge any money. So, and I do believe, and this is true not just for small retailers, but even for large retailers, right? Omni channel was thing that everyone wanted to, but everyone was busy servicing their. That's changing now. That's changing now because consumers are looking to place their orders without coming to them, and that's the need of the hour for all retailers, right? Like if they want to be relevant in this world where there's an Amazon, there's a Geo, right? There's a big basket. They would need to be equipped with the right technology, and they're keen to be equipped. So thus, and we are saying that okay, we are not kind of pushing our marketing to you to use that. You have your own marketing. Like here is technology that you can.
So I want to understand this offering a bit better. So this is like a self-service platform where a retailer can list his inventory and share a link with his neighborhood customer base through WhatsApp or whatever, and tell them place your order here. And when they go to that link, then they can also make payment, and the payment comes directly to the retailer's bank account. And you have a collaboration with some logistics company which takes care of the logistics, and that gets charged to the retailer. Is that what this is?
It is that. Just build on that you've got there, right? Let me build on that. In case F&B, it is exact because the number of items in the inventory is limited. Knows the store the items, right? And he's trained on that concept with a Zomato. In case of grocery, because the grocer and we all know so leave inventory, he can't do catalog. Also. He doesn't have the time in the day, right? For him to list, I have all of this, and then I know the stock keeping units also on all of this. Is not gonna happen. We've kind of done it differently. We've said that like the dominant for ordering in the is to kind of pick up the phone and say मुझे ये चाहिए ये चाहिए ये चाहिए like you create a list of 10 items and give it to them. You would say ये नहीं है लेकिन आप ये ले लो. We've tried to simulate that experience here where you create your list. We've got the universe of SKU, right? But give this list to the retailer after getting it from the consumer. And the retailer, in the past, we know the prices he's quoted for each of those items. So we pre-populate those prices, or if he's never, then we kind of suggest a price to him. This is what we are seeing everywhere else. And he can then, with the minimum number of clicks, say, like suggest replacement, say I don't have it, and then send the itemized bill back to the consumer. And then the consumer can pay, and then we'll attach. The fill rate issue will really in case of categories like grocery, right? I ordered 10 items, but I got only that gets to an extent solved because I'm not paying for what was not available. Like the payment is not up. Payment is after the right, very much like how you'll order. So and I think that's a very important because for this market, right? It like giving this retailer a catalog for him to populate will never work, right? I think if they are trying and there are people attempting that, but that's just kind of overlaying an existing paradigm onto a new market where it does.
Okay. So how does the bill go back to the customer? Is it an app where they receive a notification, or is it email, or what?
The user is on Magicpin app. Of course, it goes on the Magicpin app. They can see the itemized bill. In case of these white label links that we created where the user might not have an app, in that case, same page from which the user placed the order, that same page shows the status and the response from the merchant. We would send a SMS the moment the itemized bill hit, that link the user on.
Okay, okay. This is super interesting. But right now you're making no money from this because you're giving it all free, or do you take a like a payment processing fees or anything like that?
Like in a way, this is the base offering on our stack. The next offering is marketing. So we are hopeful that if we enable these merchants to do business online, then at some point, and some of them will need services around marketing, which is what we are there to offer, and we've kind of finished that from that point, and that is sufficient, right? Like to us, that upsell will create enough margin opportunity for us. And while we are not making as much money in doing this, but we are creating a future pipeline of revenue, but we're not losing money doing it. And our marginal cost of servicing this merchant is pretty close to zero.
Hmm. So this is like the freemium model, basically.
Yeah, you can think of it as that. It does many more things though. And my sense is that the new that so I spoke of this example of an item. When you go and order from even a white label link of merchant, that ITC or PNG offer is sitting on that store, right? And it's a great thing for the merchant, great thing for the manufacturing brand, and a great thing for the consumer, right? We are just able to bring it at the right place, and we are seeing that those orders are also picking up. So we've in a way created that revenue stream that existed.
So I'm curious on where this came to. I mean, where this idea originated from. Like, was it like demand driven that people asked you make something like this, or did you think of it on your own, or because this is fairly innovative, and I'm curious to hear about how this got developed.
I think necessity is the mother of innovation. As we wanted to move in this direction of online for time, but we were busy building our business. So we did not. But the moment I think March and then April started, we realized that our ability to serve our partners comes from this ability of enabling the partners to do online. Right? Otherwise, like we can't because people are not going out, and people will go out in 6 months, right? 3 months, 6 months, whatever. But these businesses need to exist today. We sold the save the local vouchers, which was a campaign to say that get 50% off on your favorite merchant partners when they open. You can use these vouchers, right? Let them enable them to serve. But you can go only so far. Like there needs to be a business case that works out today, and that's how this concept of online enablement came up. Once we started to do the online enablement, we realized that the existing challenge in there are two kinds of challenges in the F&B category. The challenge is that the marketing is being bundled by the existing players with the delivery capability, right? So you can't just take the delivery capability, you have to take the full marketing back, right? And that makes them feel that the price is the other side. And thus we said, okay, if we decouple this becomes a great way for us to provide them a service and also penetrate. On the other side, what we realized is that, and there's massive inbound demand, by the way, because the whole market is trained on online delivery. The moment they see that they now no longer need to pay that high rate for their organic customers, also, they're really happy to join. So we are seeing a very like deep inbound on that. But on the other side, we realize that industry as a market just needs to be service. For example, if when I see a like a geo saying that we will enable the kirana, it'll be really hard for them to enable kirana. They'll be much better positioned to open their website as they've done, which is GeoMart, integrate that with their own existing retail and purchase directly from the manufacturer, right? That's a more cleaner method, better fill rates, better margins, it works better. Working and enabling the Kirana just requires a different approach. And we had built more tools already, right? For example, this manufacturing brand integration was already present. We, with our partners, were integrated into their POS, so 100% of whatever bills they were printing were coming to our back. They were doing that because we had relationship with them that if our manufacturing brand partner sells more, then you get a part of that commission. We earn something and we share something. We share something with the consumer also, but we share something with you.
So the data of SKUs and pricing was already there with you.
Yes, exactly, exactly. Right, and we had a method to collect that data on SKU and pricing at a store. So all the stores that we are powering, we just integrate our POS utility on that, and the moment the store starts, we know what this store is selling and what it not. Our lists that I spoke of, those are smart lists. Those are not just universe. They are actually custom to that merchant and what that merchant. And that the moment we had that clarity, I think the focus from the tech side on the product side, right, was pretty sharp. A lot of this was done over the last few, and we are in the market live kind of building this. And the way we are seeing recovery pan out, that while the traditional category food and fashion will take some more time, right, also to come back, in the meantime we've got this entirely new engine that's come in for growth, and together all of these.
Hmm. Okay. So, who are the competitors for you first in your previous, like the already existing business of allowing offline merchants to do intelligent marketing, and in this new business? Let's start with the previous business. Like, I don't think there are similar companies in the US, right, who do something like this.
No, not really. Not really. Use like doing marketing for retailers. There isn't. There is the reward program companies, small retail, but no one that is getting the seats and stuff. I think there are pieces in different parts of the world who are doing one thing in some way, but no one's kind of doing this exactly. And our it doesn't matter what means we use to get to an end, right? Because the goal is to drive marketing for retailer. And in the past, there was, for example, and Yang in China and Lightspeed in. Their job was to drive business to these offline retailers, but those companies got built in a very different way. They just burned through a lot of capital to build that initial base of users and merchants, and then they went on to do more things from there. We kind of were born in a different era where mobile phone was present. We were able to use this data from to build this piece out. So we kind of approached it differently, but to achieve the same outcome, which is to drive performance marketing for our part. In terms of competition, I think your original question, right? Like there were many attempts at this space, like, but very few period earlier on. There was Snapdeal in its first avatar, which started this that page, and they subsequently pivoted because this was a hard to capture market. Right? At that point, mobiles didn't exist. It's really hard to do this stuff without mobile, right? I think there was Groupon, which subsequently became Nearby, which it was My Dollar, which was so there were multiple attempts which were made.
I think there was Crownet also.
And they were I don't know finally if they went about building the local redemption cycle, this piece around being able to get the retailer see the redemption at door and making him believe a lot more in what he's trying to do. That I realized that that's a problem which is as much operations, right, as it is just. So I would say there were these all of these different approaches which were trying to deliver the same end outcome, but they kind of came at it differently, and they had thus different pros and cons about it.
Grofers would be something like this, no? Grofers also like works with Kiranas to fulfill orders.
No, no, not at all. Growers is actually completely vertically integrated to the point of manufacturing the products, leave retailer.
What kind of transaction value have you seen so far from this new business?
We are seeing that this become increasingly a large part of our business. I'll just hold back on numbers there for at the moment. But yeah, we're super excited. The rate at which this is growing, this will be a meaningful part of our business.
Okay. So, how, so obviously now I have a fairly good understanding of how the COVID and the lockdown situation has impacted Magicpin. How has this impacted your thesis as a VC? Or, are you still an investor in your personal capacity, or is Magicpin your 100% right now?
No, no. Magic Pin is my 100% of what I'm doing. Of course, there is some. Of course, Lightspeed is like family, so to that extent, there is that alignment and interest in what is happening within the Lightspeed portfolio, and the other is a few friends who I had invested in more as a friend than as an investor that I continue to be close to. But yeah, I think this is where I see most of the action, and this is where I exchange most of the ideas. Like this fundamental shift towards work from home being a lot more and e-commerce being a lot more of our lives, right? That will just like change the fabric of in more meaningful ways. That doesn't mean existing stuff will happen, right? But we will find that new opportunities will emerge, right? Let me give an example of that, right? For example, think of the manufacturers. So far they had been happy to work with let's say an Amazon or a Flipkart and sell through them on the online channel, because online channel was not as big. But online channel is getting big. They don't want to be then like upset of whatever the retailer is selling, because the retailer they would be looking to substitute with a white label as soon as the retailer can. So they see that as a risk and as an opportunity for them to build their own direct to. So ITC is doing that, PNG is doing that, HUL is doing that. All of them are building their direct to consumer shop, which was not happening in the past, because all of these companies would be working directly with the end with the distributors, right? But now they're building D2C. What that does is also it means that if these companies are building D2C, many more companies can build D2C, and D2C would be increasingly and there are more brands even on our platform. We help new direct to consumer brands launch because like, we're fairly effective, efficient, and also can segment the right population, reach out to them. But we will see a bunch of more as people spend time online, just more direct to consumer brands come up. We've seen some, and we'll probably continue to see more. And then I think the other things that will happen related to this is that that location will be less important. Location was supposed the biggest thing in retail. I would say that as online increases, right, like that, the preference for just that location will be less relevant. The service provided would be far more valuable. That means the rentals should go down, which is something that's already starting to happen, which is a silver lining for most retailers. But it also means that providing a great experience becomes more important, and that experience is important. The small retailer also, I'll want to control my storefront to the extent I can, right? The online presence, or what is it that I can provide as extra service, which is the kind of SaaS that we were. That like whether it's chat inside that, it's being able to send pictures of products, right? All of these things become a very important part. And that is what we were attempting to do, like build the social layer on top of it. I think those concepts will have a lot more role to play as kind of internet penetrates deeper and deeper. So it's a great thing. So while the shift of purely offline retail will leapfrog a little bit more towards online retail, but a lot of that online retail can come to the same offline retail provider. And I think that's where around enabling these retailers, there are opportunities around enabling demand to discover these retailers, there are opportunities. I think that's an area where there would be new things that will happen, and entrepreneurs and companies that are around this area would find that like the next layer would be far more efficient because it's technology oriented, based on internet, versus the previous build of retail, which was very offline and thus slow moving.
So, if you were still at Lightspeed, what kind of companies would you have been hunting for right now to invest in? One is obviously D2C brands. Besides that,
And I'm focusing my answer on the retail side. If I kind of remove that lens, I think there would be a lot more stuff that I think that will become available. But if I stay on the retail side, I would say that this enabling the millions of small retail, that's a core theme that and should be one. I would make one more point that a lot of these retailers would fairly value conscious. Figuring out business models is another important piece. Just by creating a large base of retailers, it will not be sufficient. But if you create that large base of engaged retail providers, then I think there would be opportunities around providing marketing to them, providing credit to them. If you're in the way of the transaction, next wave of whether it's I think credit, marketing, any of those pieces that can get built. So yeah, I think retailers do a better job of servicing their customers. That's a very here and now. We saw this last time when monetization, that all retailers suddenly understood online payment. I think all retailers are likely to understand online commerce in this, and that opens up just a big chunk. Right now, around D2C brands to these retailers also. One of the example conversations I've had with future forward version of what we're doing, we can tell, let's say, a chemist in a neighborhood that in your neighborhood this new medical device selling a lot. Here is the manufacturer for that. We'll provide you a credit line from the manufacturer, stock it at your store, and we'll reach out to your relevant consumers in the catchment areas and ask them to come and pick it up from. And so can you some of this D2C, but then use this massive offline distribution to create new value coming out. I think there would be companies that are working in different flavors of that. It's hard for one company to do everything, even though many would claim, but I think companies which are able to solve point problems, each of these.
So that was Anshoo talking about how he built a performance marketing engine for the offline retail world and how the pandemic actually opened up new opportunities for Magicpin. Do check out the Magicpin app on Play Store to find great deals and win cashback on your shopping.
If you like the Founder Thesis podcast, then do check out our other shows on subjects like marketing, technology, career advice, books, and drama. Visit thepodium.in, that is thepodium.in, for a complete list of all our shows.